Toronto's real estate market is red hot, even with inflation rates rising and mortgage rates going up. If you're an investor, what do? What does it look like to get a commercial mortgage? What does it look like to be successful in this climate? I'm here with Jiang, who is a mortgage expert, and we're going to get the real deal from him, some tips, some advice, and just a way of thinking about how to do things differently. Hey, Jim.
Hey, how's it going?
Good. I always love chatting with you because you're so knowledgeable, and especially right now with the way the market is, people are always asking what's going on. How do I invest? What do I do? And so I thought this would be a perfect episode for us to talk about what does the landscape look like for people in the commercial sector? What does it look like when people are trying to get a commercial mortgage? Of course, it goes into like residential because we do have people who invest in properties. So let's get into the thick of it.
Yeah. So I think it's definitely a great time to chat about it. I think as we do see a lot of clients as a mortgage broker, obviously do see a lot of clients with residential mortgages.
Yeah.
But also for clients, once they get to a certain size, typically, either for their own need to open the business or for their own operation or for investment. Typically, once you get to a certain size, that's when they are starting to explore that direction.
Yeah.
And I think clients tend to not get as much information out there from the financing perspective for commercial properties, different type of properties, what to look out for, what to expect. Yeah. I think to kind of start off, residential properties everyone get is very standard income ratios, down payment minimum 20%. We have some programs that you can put less than 20%, right? Or for new to Canada clients. With commercial space, it really boils down to two camps. One camp is called owner-occupied properties. And these are properties that are used for the borrowers. So if I have a business, for example, if I'm a lawyer, I'm renting right now, I need a place for my practice. That would be owner-occupied. So I would personally look for a property that suits my business operation. There are other camp, which is the investor-owned properties, mostly for high net worth clients, who's looking to either get into the space to get better return or to diversify their investments from their current holding, maybe equities or fixed income. So they look for properties that fits in this category. They might want to purchase a warehouse. They might want to purchase some form of office space or like a mixed use space. And the whole point of this is to rent it out.
Yeah.
And to collect rent year over year to generate returns from the investment as a long-term holding. So either way, the financing looks a bit different, depends on which camp you fall under and which kind of financing need you're looking for.
All right. Well, I mean, the very baseline, deposit, right? Like if you're looking at a property, as you just mentioned, in residential, it could vary 5% to 20% plus, right? But when it comes to commercial, there is a baseline. Like you have to have a minimum 20% deposit on any property. But you and I both know that to get the better cap rate, you should have more of a deposit.
Well, in general, depends on the camp. So when we talk about investment in real estate, and when you talk about cap rate, most of the cases, those are geared towards investor-owned properties.
Yeah.
So essentially, just to kind of break down in a high level, cap rate essentially is a matrix that you use to compare different properties, and it's the expected return on your investment, to put it broadly. Because it is kind of a measurement that has to be standardized, meaning that I have to be able to compare with any type of property within that category, you don't include mortgage calculation in there. So there's no inclusion of leverage. So essentially is you looking at the net operating income from the property itself. You typically look at the gross rent that you can collect. You minus different expenses to be included to operate the property. Mm-hmm. You get a net operating income, which is the net return, essentially after you paying the expenses, and essentially using that to find out the return percentage based on the price you purchase.
Yeah.
So if you purchase a property that is, for example, given the same rent for two property, the exact same type of property, if the cap rate is higher for one property, it means their price is cheaper, right? So if I receive, let's say, 100,000 a year net operating income, if I'm buying a property at 800,000 versus $1 million, my cap rate is definitely higher for 800,000 property, meaning that my return is higher. Yeah. So as an investor, I tend to look at those properties as an opportunity for a potential investment because I can get better return. But you obviously have to consider other parameters as well. It might be a reason for it being having a bigger cap rate, lower price, right? So other things you have to consider. But cap rate is a good standard to try to kind of weed out and filter your investment opportunities.
Yeah, no, and I think that's really helpful. And this is a part of why I work with lots of people who are investors, small, medium, large. And people are always interested to know, oh, well, is that a good deal? And I'm like, well, residential and commercial are really different in terms of how we approach it and depends on what your end use. And so asking those questions and processing that is really important. I mean, you and I have also talked about like different kinds of professions, different kinds of businesses will have different liabilities or different concerns, right? Mm-hmm. And different potential. Mm-hmm. Mm-hmm. From a mortgage perspective, especially when you kind of look at crunching the numbers, how do mortgage lenders look at people who are applying for mortgages?
So especially in the commercial space, the another difference between commercial residential is that the banks are most of the cases more risk adverse because you are dealing with a business. You're really not dealing with let's say basic human need as shelter. Yeah. There are risks involved with doing a business. So from the bank's perspective, being a lender of debt, they have to be more careful. When it comes to kind of commercial, it really boils down to different property types, different business operation. Mm-hmm. So for example, if a lender is lending to a professional, like a dentist, for example, given the traditional income that you could generate as a dentist, the bank could be more open to give more exceptions, favorable terms, things like that.
They're awesome tenants, right?
Correct.
They take long-term leases.
Correct.
They take good, they have very stringent practices of the conforming to the space, right? And how
Correct.
They maintain it. So
correct. So for example, if you look at a strip plaza, for example, with plaza without a anchor tenant, that's what they call it. It's essentially a well-known brand. So for example, Tim Horton would be an anchor tenant. A BMO branch or bank branch within your plaza would be an anchor tenant. Yeah. So the bank might view between two plazas, the one that has an anchor tenant more favorable in their terms, and potentially will give better overall, rates, loan to value, and overall factors and considerations. Versus if it's mostly, let's say, composed of mom and pop shop, unfortunately, just because overall hospitality is more cyclical, the bank has to be a bit more risk on for those properties. They might charge a little bit more interest rate. They might give a little bit less loan to value to protect themselves based on the industry, unfortunately, right? So I think that's the difference you're looking at. Like right now, for example, office spaces, we all heard about that, right?
Yeah.
Due to COVID, obviously you have a bigger vacancy rate right now. So we are seeing a cap rate increase on those properties, meaning that their prices are coming down a little bit, right? because a lot of investors are potentially doing more of a wait and see approach to see if this trend of working from home how much kind of change you will be on the overall kind of corporate world.
Yeah.
Right? So it depends on how these large companies are renewing their lease afterwards. So we'll have to see how that changes going forward.
I mean, there's so much conversation now, right? Like, I mean, we have a housing crisis here in Toronto. I mean, in so many parts of the world are facing that. And with the whole shift in work culture and work from home culture, what's happening in all these commercial spaces? But, people float the idea of like, well, maybe if these commercial spaces are vacant and empty, we'll just convert it into residential. But it's actually not that easy.
Yeah. The whole process, as far as that is a trend that people are exploring, just because obviously we have a supply problem. So you got to think outside of the box.
Yeah.
So if you're looking at these offices are potentially just being a bit more empty, you kind of have to do something about it. And one way is potentially conversion. But the challenge is that the process time, as well as the structure initially when it's being built, it's not really being built as residential. So conversion cost and whether it fits in the overall kind of area, it takes a lot different parameters to consider and potentially cost more to even do the conversions, right?
I mean, I just think of office suites downtown and they're not built with windows that open. I don't know.
Yeah.
Like, so if you did a conversion, is fresh air part of that consideration?
Well, there might be additional costs involved, right? So things like that, you have definitely a conversion part of calculation to see if it's worth it, right? Yeah.
I mean, you also had we had talked about you talked about like anchor businesses, and we talked about mom and pop shops like dentists and different professions and stuff like that. When it comes to people now in this climate, what are you seeing in terms of, is it a good time? People always ask me this question. Is it a good time to buy something?
I think right now it's a bit tough kind of market, obviously, because, no one really knows where the rate is ultimately heading. We can only kind of have a sense that it's kind of near the end of the aggressive hiking cycle.
Yeah.
I think it really depends on individual.
Yeah.
The big piece here to consider, though, just for your audience to think about, is you typically, when you're facing an interest rate increase environment and a credit tightening environment, the first thing that you'll see is the banks would start tightening their lending parameters. So I think in the second half of the year, potentially, the banks will be more selective on who they want to lend. So maybe before they might be able to give some exceptions on these type of properties, they might decide and say, you know what, let's just wait it out, and we only select these type of great type of profiles.
Mm-hmm.
So I think potentially in this type of environment, it's not about cost, it's about whether you can access credit.
Mm-hmm.
I think.
And how does that credit get established or determined?
So it's about understanding how much you can borrow and act on it, and act on it early, before the policies, the environment moves against you.
Right. Yeah.
So I kind of a lot of my clients, especially investors, they're looking at the market. There might be some opportunities, and I always tell my clients, you have a lot of kind of equity build up in your rental property, and if you do have the income to qualify, it's actually not a bad idea to consider potentially pulling out some of the equity to prepare for opportunities, right? At the bank level, especially with residential properties, we have a lot of equity. It's definitely cheaper money than getting it from commercial.
Yeah.
And there's ways you can structure potentially with more interest write-off, right? With the structuring between your personally as well as corporate taxes. Mm-hmm. So there could be very favorable that way. So you don't want to get caught in the situation where you have no options. That's what I would say, right? Because if you have the option to either refinance or sell your property, that means you have more options to pick from. Depends on which path you're on, right? Some situations, it actually makes sense to sell your property. For example, you've already locked in a lot of equity. Maybe it makes sense to transition your gains into another opportunity.
Yeah.
But sometimes you might not be ready to do so, or a property might be you're thinking of to transfer to your to the next generation. What do you do about it? And then the best way to optimize your credit, your capital, is to leverage it.
Mm-hmm.
And in Canada, obviously, you have to go through the calculation, the ratios, and the income with the residential, with the stress test. So you always wanted to get credit when there's opportunity and that you can obtain.
Yeah.
And then, you know.
Well, thank you. I really appreciate that because I think it's really insightful to know about that. One of the things that we were talking about was like, developing creditworthiness and those type of things. If many businesses are entrepreneurs, sole proprietors, right? For instance, like lawyers or doctors and dentists and that sort of thing. How many years in business do you need to be in just to be considered or qualify?
Typically, they need 2 years minimum. There are cases where you can get different type of small business funding to start off.
Yeah.
Those tend to be much more expensive.
Mm-hmm.
And the point is to maybe get started and transition to an actual regular commercial loan or commercial kind of operating line of credit once you're established.
Yeah.
But the minimum is 2 years and depends on the industry. If you are in a more cyclical industry, like hospitality, for example,
like restaurants.
Restaurants. Well, that's So in that industry, you tend to want to be more established, or for them to feel that you have many years of experience. You really know what you're doing. You've done this before. You have a great plan to be able to get better pricing or more loans. How
do you demonstrate that, though?
I think it's a track record of making sure you definitely open a business account. Deposit your I see a lot of clients sometimes kind of transfer between personal and business. Have to make sure your deposit goes to your business, show that you're making good profit, do your finances, make sure everything's up to date, and have a reflection of a positive trajectory, and have a plan.
Like a business plan, right?
Correct, right?
Like if you're new, like I work with lots of people who are like, they have a vision. They've got like, I'm going to start this new business and I want to, buy a property and I'll get some investors or whatever. I'm like, whoa, hold on a second. You have no track record. We need to demonstrate that. At least come up with a business plan. And so doing transactions in commercial, if people are not ready, can take a little bit longer and preparation because of how important it is to demonstrate I have a plan, I have a vision, I've looked at what my expenses are and what my costs will be and what my revenue stream will be. And plan B of, this would be optimal, this would be ideal, and this will be what happens in a worst case scenario.
Yeah.
So I think one of the advice I often give people is like, okay, take a moment to step back. There's a lot of prep work, plan it out. And what you're speaking to about if you're opening up a business, you have to be able to demonstrate like income coming in or what's your track record, what's the experience you bring to the table.
Yeah. And also that's part of our value add as well when we advise clients. We, have experience in many different type of business and different deals. We help clients structure the planning piece as well. I think a lot of times clients have a vision, have an idea, but they might not know how to put things on paper.
Yes.
We help them with that. We understand what the lenders are looking for, what format they're looking for. And also at the same time, kind of almost force the client to think about, have they thought about everything? So that sometimes client might say, I didn't even consider that. So I need to actually think about that to be incorporated into my business. I think just like any business, large or small, the approach has to be similar. The fundamental has to be the same. You can't have a large company without any goals or visions or planning, right? So it's similar to small businesses. The more you prepare, the better potential of be able to get financing
Yeah.
easier, more loan to value, build a better relationship with the lender, and in the future to potentially get more help and more
absolutely.
leverage.
I mean, I remember when I helped open up my first business, like venture from scratch, and it was such a learning experience. And the one thing that I think that was quite key, and as you said, that's a value add, it's understanding how to present information, how to develop develop the information, how to do the presentation. And for me, with a communications background, it is something I do all the time. Like when people say, "Oh, I want to do this," I'm like, "Okay, how are we going to present this? Do you have these basics?" And they're like, "I didn't think about that." And I'm like, "Yep." I mean, it's very rewarding to work with people and to be able to do that. And I think a lot of times people don't even recognize that that's a value add service that you and I bring to the table of, okay, you want to start your business, you want to do this, you want to buy property, or this is what we can do to help you.
Yeah.
No, that's really great. And I appreciate us going through that because it's sort of like a 101 that I wanted to cover, like more like high level, because I get these questions, especially from commercial clients who are like, okay, what do I do? I'm like, no, we're not ready to buy a place yet. We have to do these steps. And then when we're ready, we're gangbusters, like, and it's satisfying,
Right.
To see people succeed in that way. What I wanted to talk about was also leveraging, right? You mentioned a little bit about it, right? Like when we had talked about relationship of tax and income and those things. Can you talk a little bit more about that?
Yeah, I think to begin with, obviously each client is different, depends on their risk tolerance.
Yeah.
So I think this will kind of come from my own opinion, right? But in my own opinion, especially in Canada, the main thing that we can't really all avoid is taxes. And we're definitely in the higher tax bracket nation. We do have benefits in the corporate tax structure. So especially for clients who are self-employed, who are incorporated, they have a lot of ways that they can, file income for themselves or keep it in the business. A lot of flexibility there. By structuring a property, you can optimize your tax payment at the lowest amount possible. At the same time, generate as much borrowing power as you can. And for professionals as well who are receiving high T4 incomes, the challenge they have is a lot of their income goes into tax.
Yeah.
I do encourage those clients to start utilizing those income and to leverage. And real estate is one of the best options to do that.
Yeah.
I think that's one thing that no one is kind of arguing is how strong the real estate market will be in Toronto over the long term. Sure, there's short-term volatilities, right? That's to be expected.
Yeah.
But in the long term, given the immigration, we're definitely I do obviously myself have a very strong bullish view. So if that's the case, I do encourage individuals who are T4 income, who have a high income, not to waste that income, use that income to borrow, right? So that they can get into the game and kind of leverage and grow their wealth exponentially. I think without mortgages or leverage, how can you buy a big ticket item such as a property? Who can, save net after tax income to be able to afford a property without existence of mortgage?
Yeah.
At the same time, if you look at big companies, right, the Fortune 500s, most of those guys, almost 100%, either have a mixture of debt or equity structure.
Yeah.
So if they're borrowing to grow, there must be a reason behind it that is beneficial.
Yeah.
So that's why I think clients should consider looking at that, optimize their tax payment, but have the maximum borrowing power so that they can leverage and grow their wealth. At the same time, if you can leverage, you're basically use the money, the bank's money, to help you grow.
Yeah, absolutely. That's what people are always talking about, right? How do I leverage?
Right. So, I think with the business for self clients, they have more flexibility because they can say, well, I'll just pay myself this much this year. So for that, I'd say it's a more conversation, most of the cases between, the professionals, right? Like the realtors, their mortgage brokers, their accountants. It's a three-way conversation. I came from, before become a broker, I was in private banking. That's how we work with clients, with high net worth clients. It's a team approach. So saving taxes in dollar might not be the best option in the long-term sense. You have to look at your wealth and how potentially saving taxes here might benefit or decrease your overall wealth because you lost the opportunity to borrow. Mm-hmm. So when it comes to business for self, we have a lot of option that way. When it comes to T4, as I said, highly encouraged to look at it and not to give up. I have certain situations where clients are super high income investment bankers.
Yeah.
Things change. They were making $400,000 or $500,000 a year, right? When the times are good. Suddenly, they didn't utilize those incomes. Suddenly, unfortunately, they got let go in one incident. All their previous income doesn't mean anything to the lender at that point.
Yeah, because you don't have a job.
Correct. So I think I need to make sure your listeners kind of start having a shift of a mindset and think like a bank to borrow, quote unquote, when you don't necessarily need the fund.
Okay.
And think more like a backwards thinking.
Okay.
Bank is not a non-for-profit. That's how we feel like in Canada, just because we all have it's more like a nationalized bank.
Yeah.
But at the end of the day, they are for-profit. So you have to understand, if you don't have income, when you go to a bank, it's very hard to get financing.
Yeah, of course.
Right? They're not, when you need the fund the most, it's really difficult from the bank. And if you think on the other side of it, it actually makes sense, right? If you are in charge of a pool of fund for your client and you're lending them out on a daily basis, you'd rather lend to somebody who you think will potentially pay you back.
Of course, 100%.
Correct. So someone who have a great track record, it's good. But if they tell me currently I don't have a job, but someone else does, I probably want to lean towards the other person just to make sure I'm protecting my assets, right? So that's why you want to present yourself, prepare early, get equity when you can, and then deploy when you see the opportunity, right?
So building on that, thinking backwards, think like a bank, maximize your opportunity when you have your employment, right? What if you don't have a plan fully? Right? And I think I want to do this. Like, how do we get people to be more prepared? Because I even work with clients who know they want to do something and they're like, I'm not ready yet. I'm not ready. I'm like, don't worry. Mm-hmm. This process doesn't happen overnight. Mm-hmm. Even for people who are buying houses. Mm-hmm. I'm like, no, we need to start as early as possible so that you have a plan. Like, we're giving you a strategy to be successful. Mm-hmm. So when someone is like, investment banker who is making in a job that has high value, like, 300, 400, 500,000, what does that look like when they go and borrow the money?
Yeah, I think that's one of the value add we do outline as well. Like, that's kind of my philosophy. I try to approach each client like how I approach clients at private banking. A holistic approach. Yeah. So first of all, I think you have to look at the situation as almost like you're playing almost like a planner role in essence, right?
Yeah.
But knowing your expertise, right? So focus on focus on the lending side. Mm-hmm. So I think a lot of clients don't know that having that conversation with the broker doesn't mean you necessarily need to do a deal with the broker or necessarily need to do the application now.
Right.
It's about having that conversation early for me to understand your situation, obtain the documents so that I can fully translate that information into maybe a deal that I can underwrite up front. We can park the situation, we park the deal until when you're ready to go, but it gives you a picture of how much you can afford, what are some potential scenarios you have to consider, what are some paths that you can go through, why you should leverage now versus later. Yeah. Things like that. And I think that always benefits people. And another thing is with the broker, this is our career. I'm not here trying to impress somebody. I don't really have a boss per se, right? We all work as a partner at our firm as colleagues. So I'm not here trying to impress my boss and quote unquote make the office politics and trying to jump to a VP position. Yeah. I'm here to build a book of business that hopefully it's a whole lifelong relationship or as long as their mortgage debt cycle. Yeah. So I'm not here just trying to do transactions. So having that long-term conversation, I don't mind it at all. And actually, I welcome it.
Yeah.
Yeah.
No, and I think this takes us naturally to the question or to the next piece that I wanted to talk about. What is that relationship with a mortgage agent, broker, and the type of lenders that you work with, right? The type of funds that you can access, the lenders that the different types.
Yeah. That's a great conversation to talk about for a lot of clients. And I do get that a lot because I think a lot of clients are kind of not sure or a little bit afraid to ask.
Yeah.
So I think this is a great opportunity to kind of address that. So if you think of the bank, they're a non-for-profit. So they have to make profit. They tend to generate business through various ways.
Yeah.
They generate through their own staff, somebody who work at a branch, salaried individual.
Yeah.
They could generate mortgages through what they call a mortgage specialist,
Yeah.
who is employed by the same bank and can only offer the product of that bank.
Yeah.
And they can also generate business through brokers like us, who basically find clients that would best fit into that category of the product that would best benefit the client, as well as best benefit the lender. We're trying to create a win-win situation. We essentially works similar to a mortgage specialist. We are commission income per each deal that we bring in.
Yeah.
We don't charge extra fees to client, and I think clients should do their due diligence. Typically, if you're doing what we call A deal, like the banks, the credit unions, there shouldn't be fees associated with it. We are here to work with clients to find different options for different type of needs. For clients who qualify in the A space, their goal is probably most of the case trying to find the best rate. Our benefit is to access all of these lenders with one credit pull, one application. I can approach maybe 2-3 lenders that are already narrowed down and find the best option for them to find the best rate, find the best deal, find the best term, find the best overall package. For clients who are maybe looking for different things like more leverage, maybe their credit is not as good or it has some past history or their, other situations. We have access other than the bank to have what we call B lenders, who are these financing institutions that are looking for clients in this category, who are looking to find clients who might not show the normal income. That typically what the bank want, the black and white, kind of black and white fits in the box type of deal. And a lot of these clients were able to help them to close on a deal, find a property, find a deal, close on a deal, and find ways, help them and guide them through how do you get better at your credit, how do you actually grow and transition into a lender bank after a few years. Those are great solutions for clients. And lastly, we are able to access even the highest end of the capital stack, which is private lending. For clients who are in a pinch, or for clients who doesn't need a long-term financing. We can get private lending for potentially for bridging, potentially for construction, building a property, flipping, potentially for bigger projects. I have a client who's buying a few houses, turn it down, and build multiple plexes. Things like that. We have the option. We're not here just trying to place you into the whichever one that has the most benefit for us, because we are here for the long term. I'm not here to do one transaction. I care about the feedback because a lot of my business are organic growth as well.
Absolutely. I mean, it's the same thing for me. My business is very much referral based, and building that trust and having a network of people I can pull on when challenging situations arise. And let's face it, in real estate, every situation is unique, right? And so that's why I think it's really important to cover the fact of what's an A lender, B lender, and a private lender, because I've had to tap into all of those for different clients for different reasons.
Right.
And a lot of people are like, oh, wait, what is this? Like, so when people don't have good credit, all you hear about is like, I don't have good credit, so I'm not eligible. Wait, no, don't write yourself off. Or, people fall into like, I heard this, so I guess I'm not eligible. Talk to a professional, right? Like work with someone who has the tools and the access to the right institutions, the right organizations, the right people, so that we can make a deal happen. Like, so where there's a will, there's always a way. But it's who are you talking to?
Yeah.
What's your sphere? Like I am always appreciative of our relationship because it is a trusted relationship of putting clients first and helping them figure out solutions to often complex situations.
Mhm.
Right. And so I appreciate that.
Yeah.
So, I mean, do we want to talk about liquidity and that type of thing? You know?
Yeah, as I mentioned, at least that's my opinion. I think as these interest rates continue to, move up a little bit, or as we're near the end of potential rate hiking cycle,
Yeah.
as we are getting tighter with credit, which is voiced by the Bank of Canada as well as Fed, credit is going to be more tighter, and I think right now that's what I'm advocating right now with a lot of my investors who has a lot of property, has a lot of equity. At least it doesn't hurt to explore. Hey, should we do some financing to get some equity out?
Yeah.
Because I think a lot of times clients has to think about the long term.
Yeah.
In Canada, it's different than US. The US is more 30-year term mortgages. In Canada, you typically have between 2 to 5 year fixed rate mortgages or variable rates. So if you pick a 2-3 year fixed term, maybe it's on the higher end, but the idea is you're able to purchase this property and got a deal and outbid other people or win the competition by making the right move.
Yeah.
And when the rate eventually comes down, you are able to capture that as well.
Yeah.
So I think a lot of clients, especially when you're ready to invest, either for personal usage to live there, or to invest, is a long-term investment.
Absolutely. No, I appreciate that. I think this has been really helpful, and I'm sure this is not going to be our last time chatting, or But I wanted to end on your favorite quote, which I love too. Right? A rising tide floats all boats. Only when the tide goes out do you discover who's been swimming naked, by Warren Buffett. Why do you love this quote?
I think that fits my personality. I always tend to be a more risk adverse person, even though I am a champion of leveraging the idea. And actually, I have a different point of view in leveraging. To me, if I were able to use the bank's fund, I'd rather use the bank's fund as the first resource.
Yeah.
I would keep my own fund as a reserve because I'm risk averse and because I want to manage my risk. If the interest rate increases, most of my rental properties are either fixed or variable. For the variable ones, I always have reserves ready to go. So that's just my personality. I think I don't really chase the big returns, the big things like that. I chase more stability, consistency, and look at what Warren Buffett is basically doing similar things, and look at the return he gets. Right? Look at how sound his fund is.
Yeah.
So that's what I champion, and I think having the right move, controlling your risk, is the long-term strategy to win.
It's awesome. Thank you so much.
My pleasure, as always.
It's been fun.